Hello everybody, so nice to have you here. Welcome to my channel. Today's video is the fourth in a series and we're going to be covering two topics in this series. It's my two favourite ways. This is how we've done the majority of our deals. But first, welcome, so nice to have you here. My name is Debs. If you like these videos, please consider subscribing and hitting the bell for notifications to see when new videos are coming. My videos are generally all about property and about our build development that we're doing. If you're interested in seeing those, please click the link. So today we're going to be talking about angel investing and BRR, buy, refurbish, refinance. All of our deals have been bought with these two processes because we didn't have any money of our own. So this is how we did it. Okay, everybody? We used an angel investor. So that is somebody with perhaps a large amount of capital who wants a better return on their money than what they can get in the bank. And everybody knows at the moment you can't get very much for your money in the bank. You know, I did a quick look on Money Saving Expert and like the best deals are like 2% interest. But let's face it, a lot of people, they've got cash in the bank and they're getting less than 1% interest a year. See, it's just really not great, guys. So this is a way for people with perhaps a lot of capital, a lot of cash, to get better returns on their money. And property is such a good way to do this because you're actually buying something solid rather than perhaps investing in stocks and shares, or perhaps a business which is so unstable, and stocks and shares, you're investing in something that doesn't actually technically exist. With property, you're buying bricks and mortar. So like worst case scenario, you still always have the house at the end. So I just think it's such a good investment if you've got a lot of cash. So we borrowed some money from our investor and we paid interest to them. So we were paying between 5 and 10%, depending on the deal, depending on the risk, and you've got to see like where they're at, what do they want, what do they need in order to make the investor feel safe and secure. There's a couple of ways in which you can work with your investor. So perhaps you have a very, very long-term investor who just wants to give you the money and just have that money on loan for a very long period of time. So you give them perhaps a fixed rate of interest and you can go out and you can go and buy a property. When you're paying an investor interest, you obviously need to have a property that's going to produce a higher amount of income. So perhaps you want to choose something like a HMO, you might want students, or perhaps you could do a property that you then rent out a service accommodation. So you make enough money in order to make some profit for yourself, be able to cover your costs and also pay your investor. So that would be a way how to use that money for a long period of time and just keep paying them month after month. So some investors obviously aren't going to want to invest with you for that long a period of time. Maybe you've got some got very long term, they're happy just to leave their money sat in a property and paying you both nicely, which is great, and that's brilliant if you can find an investor like that. But perhaps somebody, you know, they might want their money back after 6 months, maybe 18 months, could be 3 years, 5 years, however long, but you need to be able to give them their money back but still hold on to a property. So there's two ways in which you can get your investors' money back. The first way is flips. Now flips is a capital generation strategy. So obviously you're going to be hopefully making some money and then being able to put that money into another property which will then produce income. However, please be aware with flips you need to make sure there's enough profit margin in that, because it's far too easy to overspend on the refurb and then perhaps you have to accept a low offer. So please be aware with flips you need to make sure there is enough profit margin in there. But flips can be really, really profitable, and I know someone who's making really good money out of them, and they're doing them just every year. They're getting a couple done and they're like making a really decent amount of profit. So with that you could buy your property, refurbish it, sell it, and then you've got your chunk of money. And obviously with that strategy you can actually do something wherever you live. Even if you're in the south and the houses are really expensive, if you can borrow enough money from your investor to buy it in the first place, you can make some decent money. So a lot of the strategies that I've been talking about before are very much dependent on getting it in the north, whereas with the flips you can do this anywhere in the country as long as it's got a healthy buying market. People are going to be buying it at the other end. The second strategy in which you can pay your investor back is called BRR, and this is actually one of my strategies as part of this series. So I'm going to be covering that in this one as well because I think they're really linked together. Now BRR, or buy, refurbish, refinance, is when you buy a property, you do renovation, you refinance it because it's worth a lot more, and then you're able to pull out that money through the refinance and then pay your investors back. Now that works really well on paper. In reality, it's quite difficult to find those properties which the numbers stack up as well as that. So I'm just going to run through the numbers just so you know what you're looking for. So let's just say that you bought a property for £60,000. It's in a really rough state. You end up spending about £15,000 on the renovation, and then we've got to give ourselves a bit of space with the fees, stamp duty, solicitors, all that. Let's just say we've got £5,000 for all those fees, and then perhaps there's a bit of room there. Okay, so all in all we've spent £80,000 to buy the house, so that will include the mortgage, the deposit and all those fees and the refurb. We spent our £80,000, but now this house, when it's all done up, is worth £100,000. Now if you were to get an 80% loan to value mortgage, you would then have £80,000 of your mortgage come out at the other end. Now that 80,000 will then pay for your purchase of it in the first place. So it was the 60,000 in the first place, pays off the original mortgage and pays off your angel investor of that deposit to begin with. And then you also have another 20,000 to then pay for your refurbishment and your fees. So hopefully within that refinance, you can then pull all of your money out and pay the investors back. So you've essentially bought a house for free. Now this strategy we have done quite a few times. It took a long time for me to get my head around exactly what right areas where this worked. You know, I've done hundreds of viewings trying to find houses like this. It does work, but it requires a lot of effort and a lot of viewing. So just bear that in mind with this strategy. It is wonderful, but bear that in mind. I will be doing some case studies showing you, doing a walkthrough of some of the properties we've done, and all of ours are in this strategy. So you'll be able to see exactly what we've done and how we've got there. So that is the kind of overall idea of BRR, and that's how you can get your angels money back. Now if you're doing like a HMO, or perhaps you're doing a student property, generally getting money out deals where you pull all of it out through the refinance is really, really difficult. So maybe you need like a longer term angel for the money that's left in. Perhaps you'll leave 10, 20,000 pounds in the deal which you can't pull out in the refinance. So perhaps that's then when you get a longer term angel investor, perhaps someone who's perhaps a bit more cautious, doesn't want to do something crazy like the buy and the refurbish, but is happy to have some money left in a property, and you can just use that angel to pay off the previous angel, which you might be paying a higher rate of interest because it's a higher risk. They have a lower risk, they have a lower rate of interest, and you're able to cover those costs. Obviously you want to have a higher paying tenant in those kind of properties. So that is angel finance and buy, refurbish, refinance. I hope you really enjoyed that video. It's been really fun talking about it. I love this strategy. Obviously, I get really pumped about it. It's really exciting for me. If you've got any thoughts or comments, please comment below. I'd love to hear what you think. If you've got any more questions, I'd love to chat that through with you. Please consider subscribing if you've enjoyed the video. It's been really great to chat to you today, and I hope you have a wonderful day. I'll see you in the next video. But that's all for now. See you very soon, and have a great day. All right, bye.